Welcome to the end of day review for Monday, the 26th of February 2024. From an economic calendar perspective, we had no red news folder events, and thus there is no bearing on our trading. Moving on to the charts, starting off with the daily. What's most important to note is that we've got 4 consecutive daily bullish candles, and the anticipation is that today will be a bearish candle, as the probabilities suggest that. However, having said that, and moving on to the 4-hour chart, we do know that we are in a confirmed bearish market trend, and recently on Friday we had confirmation that the pullback phase leg, which is this leg right here, has extended itself, making this last point of supply pullback phase, albeit the last point that may validate counter trend long trades. However, because at the time of this reaction we didn't actually have evidence to suggest that the pullback phase is valid, for that reason we're not interested in trading counter trend longs until we revisit this last point of supply pullback OB, and then we'll again consider trading longs. Obviously we do have this reaction that we can't really ignore, so this will just serve as a liquidity point. However, it doesn't mean it needs to be taken out right now. Essentially what it means from a higher time frame perspective, because we've reached deeper into the pro trend extreme on Friday, we have created this pro trend primary leg on the lower time frames that will be validated when we actually wick this last point of supply on the 4-hour. So what that essentially means is that moving on to the 5-minute, our sole bias is to short, in addition to the fact that we've got this daily bias suggesting that we should short as well. In terms of shorting, what we did need to short was for the Asia high to be taken out, and likely the pre-Asia high of the day, because I consider both Asia and pre-Asia to be liquidity zones, and it's likely that both sides will be swapped. So instead of preemptively jumping into trades just because Asia was swapped, we can't ignore the fact that the high of the day is still a pre-Asia based high of the day. So I'd wait for a Frankfurt high of the day or a London high of the day, and in this case we had a London lull high of the day, but at no point was the lull high of the day actually validated by New York. As you can see, we need New York to break this low, and it didn't do so. So what that essentially meant is that coming into the next day, being Tuesday the 27th, essentially we somewhat stuck in a range, and your best option for trading is actually to wait for the range to be broken. But you can refer to the London outlook for the 27th to understand how I'm going to approach that. What I think is an important note is the fact that we're still in this leg, and because neither Friday nor Monday extended the leg, we somewhat in a range, and thus previous high and low base trading doesn't really make sense anymore. So we'll focus on the intraday price action to ensure that we get the direction right. Overall, a summary for the end of day review would be that there was simply no trading opportunities, and thus we didn't take any trades, which meant that we stuck to our trading plan.